Today is the 30th of July 2010, and this is a chart of gold over the last year. And people are stating, man, gold is down so much. Although some welcome the opportunity to be able to purchase at cheaper prices. But there was a time not so long ago where 1,000 was the big number, the number that I had a hard time getting across. Then one day, about a year ago, it got above that level and stayed within the 980 to 1020 range. Then it had a nice little breakout. Once again, had a similar sort of range, but this time it was above 1,000 from 1030 to 1070, where it culminated with a range that got it, or a rally that got it up past 1,200. And we are now lower since this top of 1220-ish from November of 2009. But we have been higher with this move in here. Where we are today is at this level here, which was an area of previous support or resistance on two different occasions. So we'll see now if previous resistance does become an actual area for that of support. For any trend lines that you want to follow, they're all broken. I don't care which area you look at on these, the shorter term charts. They are all broken. The only downtrend line, in fact, that you can have is this here. And yet you hear a lot of people talking about gold being that of a bubble. But I guess we're going to need to see more data to see if gold is really in a bubble. Now, as far as these lines are concerned, a green one, an orange one, and a yellow one. They are straight lines that represent the levels of support and resistance during this current bull market, which is about a decade old now, or a decade in duration. The orange line is the resistance that it rarely ever gets towards and really has never gotten above. The yellow one is the support line that also rarely ever gets to and rarely ever goes below. And the green one is the area in which is the magnet, the middle part of it, and it goes back and forth from this range. But what we can see since the breakout of 1,000 is that the second level got us to this green line, and that big breakout got us above this level, found support for a brief period of time below here. It was below the line, but that was, once again, brief. We captured it in here. So it's mainly traded above this green line. It is below it now, but it is barely below it, and it hasn't been below it for that long. And that's important because what we're going to do is take a look at this on a longer term time frame. Instead of just looking at the last year, we're going to take a look at the last decade, going back to July, the end of July 2000, and we're at the end of July 2010. So that gives us 1 year. So I'm going to change the scaling on this first. And for the scaling, I'm just going to put it at automatic. Alrighty, so now what we're going to do is we need to change the data ranges so that it goes back to July of 2000. And this will do it. And there we have it. This is a 10-year chart of gold. We'll put it into the tape program and do some more technicals. We can see, we were mentioning how it's been staying above the green line. Well, what we can notice here is before the breakout, it primarily stayed below the green line. That started during the panic of '08. It found resistance at that area on 2 occasions, and now we can see it's finding support at it on 2 occasions. The orange line, as I've been mentioning, it rarely ever gets towards it. It connects this top, and It's only been above it barely just once. As far as the yellow line is concerned, it got to it down towards there in 2004, and then the 2008 bottoms pierced below it. So you've had two pierces of these levels, which were generally very close in time duration. Now, these straight lines may not look too straight, but I'm not giving you a very good chart. After all, this is a linear chart, and they're not that good at charts, and I'll show you why. The move from 200 to 400 is as comparable as a move from 400 to 800, which is as comparable from a move from 800 to 16. They each gain 100%. But as you can see, they get bigger and bigger in size, which quite frankly doesn't give a true indication on the price movement on the stock. Therefore, to fix that, you need to have a logarithmic chart. So to do this, we're going to change the scaling on this so that it has a minimum of 200, and we'll say a maximum of 1500. We'll do 1600 just so we can see the orange line a little bit better, and make it logarithmic. And there we go. There's the chart. And on this chart, we can see these straight lines. We'll make a copy of this into the paint program so we can draw on here and notice that, well, we're right at this green line. It's a complete bull market. And if you're talking about a bubble, I need two things to happen. One, I need to see some sort of clear downtrend forming. The one that I showed you of just a few days, you can't count that. That happens all the time. There was a downtrend here. The thing about this downtrend is it didn't break the yellow line, or at least break it with any confirmation. So not only do we need to see a downtrend, we need to see a clear break of this trend line. That hasn't happened yet. It's not only has it not happened, but it's still in the middle of this range. So when you hear people talking about a bubble in gold, oh, I expect a bubble to occur at some point. But at what level gold will be at when a bubble occurs and how high it gets towards is still anyone's guess, because right now this trend is so clear to the upside. It's right in its trend value on this green line. It's really showing neutrality in a major upwards market, which gains about 17% a year, which is extremely strong. So if you want to see a breakdown, what we'll do is I'll make this just a little bit smaller, or give myself some room so I can draw some more. What we need to do to see a breakdown is a pattern that might look something like this. Let me just draw in a line that would be needed for the trend. Make a green line, and we'll make a yellow line. There we go. So now what has to happen is a breakdown of this trend line. Say we go down towards there. You'd want to see that area act as resistance, and then maybe test the yellow line, and then boom. This would be saying, okay, a bubble might be happening because it went below this yellow line, found resistance, and went lower. Then you can say there might be a bubble, but that hasn't happened yet. As far as having a major breakout, those people want to say gold is going to the moon. Heck, I even said it's going to 5,000, which I totally believe it will. For that to happen, it has to break this orange line to the upside. It has no choice, unless you want to be very patient, waiting till like 2040. And for that, you'd want to see maybe another resistance test of it, and then come back down, and similar type of thing. You find support, and then it goes higher. At that point there, you would have to adjust these trend lines so that you would have trend lines that the rate of ascension would be greater than what it is currently, or what the rate has been for 10 years, because the rate of ascension has pretty much stayed the same for the last 10 years. As far as the average gain on silver, this has been your average daily gain. So on gold, I meant to say. Your average daily gain on gold is about 0.07% per day. Thank you for watching this video, and have yourself a great day. Bye-bye.